let me start by saying that I think the annual budget should be abolished, or at least abolished in its current form, and return to a simple statement about tax rates and allowances and so on for the following year that are necessary in order to meet the government's spending commitments. Anthony Evans wrote an article about this in City AM yesterday, and that itself echoed an IEA publication of about 3 years ago. I think the annual budget is a terrible idea for several reasons. The first is that it creates huge policy uncertainty, and policy uncertainty when you have a government which is controlling 50% of national income and regulating to such an extent is bad for business, it's bad for everybody. Secondly, it concentrates power enormously in the Treasury. All sorts of things are dealt with in the annual budget because it's a big show for the press and the electorate, which simply shouldn't be anything to do with the Treasury whatsoever. Yesterday the Chancellor of the Exchequer talked about pension reform, he talked about planning reform. These are not matters for the Treasury. They should be brought forward by the relevant ministers at the relevant time to be properly discussed by Parliament. Thirdly, it makes for extremely bad tax policy. Complicated tax changes are put together in extraordinarily long finance acts, not really understood by anybody, and debated through a guillotine, not properly discussed, debated and amended by Parliament, and we just get bad tax policy for the long run. If we want a fundamental change in tax policy, it should be brought forward to Parliament to be debated in the appropriate manner. Finally, there are occasions for the most appalling obfuscation. And we saw this, I think, yesterday. We see it on both sides of the House, with one side deliberately trying to hide what the underlying effect of a policy is, and the other side deliberately misinterpreting the effect of those policies. And just to give one example, which has been mentioned by Matt, that is the way in which the increase in the basic tax allowance is going to be implemented and the effect of that on high rate taxpayers. The Chancellor of the Exchequer said that the high rate taxpayers were going to keep 25% of the gains that basic rate taxpayers would keep as a result of the rise in the basic tax allowance and the knock-on effect of that in terms of the level at which the level of earnings at which high rate tax was being paid. What he didn't say, or certainly what he didn't make clear, was that the high rate tax allowance was actually going to be reduced, and that's why it's 25% rather than 100%. What he also didn't say was that the Parliament was going to suspend, yet again, the statutory indexation of the high rate tax allowance. That will cost high rate taxpayers 10 times as much as the amount of money that high rate taxpayers are going to receive as a result of the knock-on effect of the increase in the basic tax allowance on the high rate tax allowance. I think that is actually quite deliberately misleading. There is statutory indexation of tax allowances, and that statutory indexation is, according to my understanding, Matt and Andrew will know more about the detail of this sort of thing than I do, but that statutory indexation is, according to my understanding, not going to happen, and that should have been explicitly announced to Parliament. So I think the annual budget is a very bad idea. There should be a minor, low-key statement setting tax rates for the following year in order to demonstrate how government spending is going to be financed. Now, just reflecting on yesterday's budget, I suppose it was the best budget we've had for 15 years. That's a very low hurdle. It was a mediocre budget. It was a 10 steps forward, 9 steps back kind of budget. And that reflects the tensions which exist within the coalition, as well as the tensions which I think exist within Downing Street as well as the difficulty, the genuine political difficulties the Chancellor of the Exchequer has reconciling trying to do things which are really very urgent, such as reducing the 50p tax rate, with the difficult financial situation. But let's, before I talk about taxes, just consider two of the wider announcements, which were wider issues which were discussed in the budget, which really should have had nothing to do with the budget at all. The first was the financing of infrastructure, and this reflects the contradictions within the coalition and within Downing Street, within the Conservative Party. The government wishes to go full steam ahead with the private financing of infrastructure, wants to find private capital from pension funds and other investors to finance infrastructure. However, this infrastructure is not only going to remain in effectively controlled by the state, we have a Conservative government, or coalition government at least, made up of Liberals and Conservatives, boasting that it will be the first government to have a national infrastructure plan. National planning of economic issues does not have a very good record, and it's not served as well at all in any field of economic activity. And in fact, we already see this in terms of the infrastructure decisions that the government has taken. It has decided not to build a third runway for Heathrow Airport, where there is clearly demand and clearly a private investor wishing to go ahead with that runway, and instead it's going to build a heavily subsidised electrified high-speed line up towards the Midlands. We have planning of bad infrastructure projects instead of market-led finance of good and demanded infrastructure projects. We have the same message when it comes to the activities of banks and bank lending. We have the government requiring, or rather the FSA under the guidance of the government, requiring that banks hold a lot more capital against bank lending. This may or may not be a good idea. It's designed to reduce the risk to taxpayers. It also raises the cost of bank lending to businesses. What do we have to complement that policy? Well, we have a business explicitly, we have a government explicitly subsidising and guaranteeing lending to small businesses through the banks. And not only that, it's subsidising and guaranteeing that lending if it is financed through wholesale markets, but not if it's financed through deposits. We have other government policy encouraging banks to finance more of its activities through deposits. So we have these ludicrous contradictions within government policy. And I think we saw the same to quite a degree on tax as well. I certainly welcome the reduction in the top rate of tax from 50 pence to 45 pence. And in addition to that, I certainly welcome and indeed called for the faster reduction in corporation tax. And I was particularly pleased to see that the Chancellor of the Exchequer signalled his ambition to reduce corporation tax to the same as the basic rate of income tax, which would also lead in turn to a significant simplification of the tax system and a reduction in the distortion or reduction of the bias of the tax system against equity finance as opposed to debt finance. In addition to that, he's promised to remove at least one of the special benefits that pensioners receive within the tax system, which will probably eliminate about 4 pages of the self-assessment tax form and take a whole load of people out of self-assessment altogether, as well as simplifying tax for the self-employed. I think all those are good things. They are hardly, I don't think they're quite, or anywhere near, put George Osborne on the same level as Nigel Lawson in terms of being a tax reforming Chancellor, and certainly he's not in the same class as Gladstone or Peel, which is something we desperately need. On the other hand, having boasted about these tax simplifications and the need for these tax simplifications, the government then announced that it was going to introduce special exemptions for video games, which Andrew talked about. I didn't understand any of your jokes, which probably reflects our either relative ages or interests. But more importantly than that, we have this, what I think is appalling treatment of child benefit on people who are earning £50,000 a year or more. We're now going to have 2 systems of means-tested provision for children running alongside each other, which are completely unconnected with each other. Personally, I would prefer to go down the route of reinstatement of proper child tax allowances or a transferable tax allowance between couples. But if you're going to go down the Chancellor's route at all, one really should merge child benefit with tax credits. The effect of the Chancellor's tax change is going to be to create a marginal rate of tax of 67% for somebody with 3 children who's earning £50,000 a year across an income band of £10,000. And if you take into account indirect taxes, that 67% probably becomes 75%. This is one of the highest marginal tax rates in the world, and surely it cannot survive. And once that individual moves from 60,000 to 100,000, you then get the little talked about issue, but I think an issue which is more important actually than the top rate of tax of 50p, of the withdrawal of the personal tax allowance, which actually imposes a 62% tax rate on anybody earning above £100,000. I do actually have a friend who's got 9 children, 8 of whom are eligible for child benefit. And if he's earning, I don't know how much he's earning, if he's earning 50,000 a year, then his marginal tax rate will be 108% across an earnings band of £10,000. That must be one of the highest marginal tax rates which has ever existed anywhere in the world in any tax system across such a large income band. It's also a very strong penalty on married couples, because this withdrawal of child benefit only applies to the highest income earner within the family. So if the couple split up, that's fine, they carry on getting child benefit. If they're married and live in the same household, they lose it. I think there are other aspects of complexity which have been added to the system that are less important, and some bad taxes such as stamp duty, which has been increased. Here I'd just like to correct a sentence which is in the handout which you've got, which is a summary of my talk, where I say that most of that burden will actually fall on hard-pressed pension funds transacting commercial property. At the time I read it too quickly and didn't realise that stamp duty was only increase was only falling on residential property. So that sentence is wrong in your handout. But I want to come back to the just to finish off, to talk about the medium term. And as others have suggested, my real fear actually is not for what's going to happen in the next year or two, it's what's going to happen in the medium and long term, over the next 5 years and indeed over the next 20 years. The government took a very mistaken decision, I think, to deal with fiscal consolidation, as deficit reduction is euphemistically known, by front-end loading tax cuts, which of course have an effect on growth, and tax rises, yes, okay. And front-end loading tax rises and back-end loading spending cuts. We have not really had the spending cuts yet, and many of them we don't even know, that the government doesn't even know how they are going to be, how and where they're going to be implemented. In terms of international academic work on fiscal policy, this is very bad policy to pursue deficit reduction by tax rises first, followed by spending cuts, aspirational spending cuts in particular, later. Secondly, the country has arguably, and George Osborne has made this point, reached its maximum taxable capacity. But the fiscal headwinds over the next generation are enormous, and the government is making things worse in this respect. Ruth has already mentioned the Royal Mail Pension Fund. So the assets of the Royal Mail Pension Fund are going to be brought onto the government balance sheet, used to reduce the national debt, probably create more headroom for future Chancellor of the Exchequers to increase borrowing and increase government spending, and at the same time the liabilities, which by some measures are perhaps 60% greater than the assets, will be just swept under the carpet, and the pensions will be paid by future generations of taxpayers. It's doing the same with regard to pensions policy more generally, by abolishing, and this was confirmed in the budget, although not stated explicitly, abolishing contracting out from the state pension. This means that the government is going to be paying less to schemes. Individual contracting out is being abolished this year in any case, to pension schemes. In terms of national insurance rebates, the government will instead take that money and spend it directly on current government spending, and it will promise to those pensioners who were previously making their own pension provision, either through company pension funds or individual private pension arrangements, it will promise them, those pensioners, prospective pensioners, higher state pensions in the future. We already have a problem, a big problem, as the OBR have pointed out, in terms of the fiscal headwinds. The OBR believe that even if we do not increase the quality of government services, the quality of pensions that are provided, and so on over the next generation, government spending will have to rise by 5% of national income just to stand still over the next generation. And if health spending rises by a more realistic 3% per annum in real terms, government spending will have to rise by 10% of national income in order just to stand still. This is an enormous amount of, this is a huge commitment, and effectively represents the costs of ageing and to some extent the costs of PFI. Without radical welfare reform to significantly change incentives to work, without radical reform of health, pensions and so on, so that people actually pre-fund and save for these obligations in the future, I'm afraid the government will be in a continual battle against the forces of ageing and a welfare state which has become completely divorced from the vision set out by its founders. Every developed country, I might add, faces up to these sorts of problems, or rather, every developed country faces these sorts of problems, but it's very difficult to see that any developed country is properly facing up to them.